Hi there, welcome to Market Call. We are talking technology stocks today with Kim Bolton of Black Swan Dexteritas. And the number to call, 1-855-326-6266, or email us anytime at marketcall@bnnbloomberg.ca. Kim, thank you very much indeed for joining us. The tech stocks obviously have rocked this year, up, the NASDAQ up as of this morning, something like 28% in 2020. Are there any clouds on the horizon for investors here?
Well, you could be sure there's a lot of uncertainty. You know, it just started, the uncertainties, when Trump tested positive, but boy, look at the things that are down the runway here. You know, once the election's over, we're going to get back to the whole U.S.-China trade. You got these looming antitrust actions against Google and Facebook. You got another potential global coronavirus wave. You've got a lapse in the fiscal stimulus. You got the chances of the Democrats doing the sweep, and heaven forbid that we get a drawn-out voting counting process just like back in 2000 with those hanging Chad elections. So there's a lot of uncertainty out there and going to create a lot of market turbulence.
It's interesting you mentioned 2000 because, of course, that was a time of jubilation over tech stocks. They'd come off the boil by the time of the election, I know, in November 2000.
Yeah. You know, for us, you know, we've done well this year. We're up 24% year to date versus the the S&P, which is up 6. Our benchmark is a 50-50 NASDAQ Russell, and that's up about 12. But we're not letting down our guard. You know, we're about 80% invested. We have about 20% cash, and that really sort of tells me, and it should tell certainly our investors, that we've had a lot of our stocks touch price target, and so that's why we've ended up building up some cash. But, you know, we still have those sort of 3 pillars in the technology field of cloud, semiconductors, and software applications. And so that is really the sort of the engine behind it. There are a lot of other themes going on behind the scenes with respect to 5G and electrification and the whole idea of intelligence everywhere, going all the way from digital content through to AI. So there's a lot of moving parts, but, you know, the market is certainly uncertain at this point.
Okay, Kim, let's take a break. It's Kim Bolton today of Black Swan Dexteritas. He's taking your questions on technology stocks, 1-855-326-6266. An email from Anne, wants to know about Art Media, that's ART on the venture. Kim, just very quickly remind us what they do, would you please?
Yep. This is, the CEO is Larry O'Reilly, and we've met with him a number of times. And So what they do is they do holograms, and they're very, very cutting edge when it comes to what they can possibly do out there. So they capture and simultaneously beam multiple presenters around in lifelike holograms, and they do it in real time. And they have a couple of platforms. They have this virtual global stage, which are life-size platforms, and then they have this Holo Presence platform. I really like this firm, and it actually has a lot of runway into it. They're a little bit ahead of their time. However, you know, if you look at the price action, a couple of I don't know, it was a month or so ago, it sort of popped, it had sort of hung around that sort of 10 to 15 cent range, and then it zoomed all the way up to 90 cents, and then it's really sort of solidified its position right in sort of the mid 30s right now. So I like it. We have a price target on this, a 12-month price target of $2.50. But I'd buy maybe a quarter position here, add a little bit down, in the lower 30s and then in the 20s, and it should definitely have a floor down around 10 cents. They brought in a lot of big enterprise clients on a global basis, so they got a good runway.
Okay. We have Justice on the line from Calgary. Go ahead, please.
Hi. I was just wondering, what are your thoughts on IBM for the long term? Thanks.
Thanks.
Yep. Okay. IBM is, they had that change in their leadership, and sort of the jury's still out. It is the change in the leadership is very, very similar to what happened over at Microsoft, hopefully, because they brought in a business-minded technical fellow. And that's what they need. So, I very much look at IBM as more as a trade rather than an investment. Right now, IBM's trading around 113. We have a price target on that, a 12-month price target of 129. So there's some room to go in here. But, as we always say, you buy it down around 100, 105, and you sell it up around 125 to 130.
So for you, it's more of a trader than a holder. Brian
right. Yep.
Okay. Finish your thought there, Kim?
No. Go ahead.
Okay, sorry about that. Brian in Parksville, BC. Go ahead, please.
Hi, guys. Good morning. My question is regarding Gatekeeper Systems. The stock's been doing great, firing on all cylinders, and we've had a little bit of a hiccup with this private placement. The news hasn't come out yet, and a lot of investors are getting worried. I'm wondering if you could share your thoughts on Gatekeeper in the future for the company.
Thank you.
Yeah. Thanks very much. So Gatekeeper, symbol is GSI. So this has been around for a long time. It was actually founded back in 1992. It's out of Abbotsford, British Columbia. And then they came out with this very interesting contactless system for determining body temperatures, and they've really struck a chord. And when they do this body temperature testing with this device, it's very, very quick with their thermal camera, and they have a lot of artificial intelligence and video analytics behind it, and they're just trying to get a lot of it's very much sort of geared toward a lot of school buses, so it's sort of in the right place at the right time. We have a 12-month price target on here of $1.20. But it's, in talking to the management, they can't really provide assurance that the company will ultimately achieve profitable operations or become cash flow positive. So that's a little bit of a concern. But, they've got the right service and hardware for these times with that thermal cameras.
Okay, Brian, thanks for that question. We have an email here from Evo. Can you comment on Docebo or Docebo? You'll correct me on the pronunciation. I'm sorry, I've blanked on how they say it.
All right, so Docebo, just a second here. It's actually interesting when you go and Google it, because there are different people on how they pronounce it. But so Docebo which is Latin for I will teach. And what they develop are mobile learning software as a service. It's somewhat like that company that I've talked about in the past, which is Pluralsight. But they have, let me just a second, I just need to pull it up to get the, there we are. We have a price target on this of $45.40 right now. They're out of Toronto. They've been around for a long time, since 2006. And as I mentioned, it's a cloud-based software as a service learning management platform, which really sort of strikes a chord during these, COVID times. But it's cloud-based, and people are trying to get their head around it. They've got clients through North America and Europe, and it's really sort of augments that traditional corporate learning management requirements out there, and there's certainly with the work from home. There are some risks. This is a pretty competitive field. And as I mentioned, they have a high expectation of market adoption with this cloud-based learning solution. But they're in the right place, and that's why the stock has especially done well of late. We don't own it yet, but we're following it.
Okay, we are going to take a break. Kim Bolton of Black Swan Dexteritas is taking your questions on technology stocks. 1-855-326-6266. We have an email from Ella who wants to know about Real Matters. And can you remind us what they do, Kim, please?
Yes. So, Canadian company, and they likewise, have been around for a while. They've been around since 2004, and they're in Markham. And so basically, what they do, Andy, is they provide proprietary software solutions for mortgage lending and insurance industries, and they do this all on a technology-based platform. Symbol is REAL. We have a price target of $26.84, and so the appraisers, insurance appraisers, real estate agents can get this software, and it actually provides mortgage lending and also appraisals, but it's on residential properties. So it's interesting though. So they've been around for the better part of 16, 17 years. Over 90% of their revenues are from the U.S. And, even though the Canadian residential real estate industry has done very well up here, it's just absolutely booming down the States. So once again, they've been very good at actually going out, showing their service, and it's really struck a chord down in the United States. It is expensive up here. But it's got a good return, 21% return on equity. We don't own it, but we're certainly following. We have a few other sort of medium to larger cap plays within the real estate industry. So that's Real Matters.
Okay. Okay. Thanks very much. We have Conrad on the line from Montreal. Go ahead, Conrad.
Good afternoon. Thank you for taking my call. My question's on
Thanks.
Square. It's been going down the last couple of days, and I was wondering what's happening with the Square, and what do you think of it? Thank you, and I'll listen to your answer.
Thank you. Thanks a lot.
Thanks very much. So Square, we actually took profit in here about a couple of weeks ago, and currently trading up at 176, and there it is. It's been all the way up to about 194. So it's actually just sort of come down as the market has come down. We had a price target of 180, 182, and so we sort of pocketed it. We'd look to actually, it's got a really, really nice floor down here, right at the, just a sec, right around the sort of 150 to 160. So Conrad, I'd even recommend, it's trading 176 and a bit in the U.S. If you can get it with a 160 handle on it, that's what I would do.
Okay. You'd be interested in that price. Dave in Raymond, Alberta. Go ahead, please.
First time caller. Just wanted to know about Snowflake. Buy, sell. What do you guys think?
Okay, Snowflake. What's that, Kim? What does that company do?
Okay, this is an IPO, and it was quite the darling when it came out just a couple of weeks ago, and so Snowflake. It has a pretty sexy name, but it's more it's not for the consumer. It's more for the enterprise side of it, and it has a huge following from sort of corporate America, because it allows corporate America to better manage their cloud-based. So as a lot of companies move their servers from the premise over into the cloud for a lot of efficiency reasons, Snowflake has really sort of struck a chord with enterprise America, and they have a tremendous. So it's it actually. We didn't buy into the IPO, because the IPO, if I recall, I think was around $85, and then it just sort of shot up. It was up, 140%, and then it sort of hung in around this range between sort of 220 up to about 290 US, and it's sort of just at the upper end, sort of around 269 right now. So I'd recommend, if you can buy it, I would buy anywhere from about a quarter. We usually do a third, but if you can get a quarter to a third under 250, and then just sort of add in increments every sort of $25 from that point down. So that's, and the symbol is SNOW, SONW.
Okay. We're going to have a look at Kim Bolton's past picks. He had one loser, he had two winners, including a double on PayPal. We'll be right back. Kim was on our show last November. His first idea was Cisco Systems. Kim, this one coming down over the period.
Yeah. We still own it. It was surprising that it didn't sort of get a little more of a pop as a result of Ericsson's results yesterday, because, Ericsson, and the reason I say that is that Cisco is a very decent provider for the 5G, for the switching and the networking and so on. But we still like it. It's still sitting here just under $39. We have a price target of 47, a 12-month price target of 47.75. And of course, the valuation is very decent. You get a PE ratio of 14, forward PE of less than 13. And, and then Cisco's got a yield on it of 3.7. It's got solid fundamentals. Earning and sales growth are good. Management is good. They're expanding their business pretty dramatically from hardware to software as a subscription, which will have a double effect of multiple and revenue growth. So, we see quite a bit of upside, and we're holding on to it, but disappointing.
Okay. Alphabet was your next idea, a 23% return.
Yeah. This is one of our top 5 holdings. As everyone knows, Alphabet is one of the best positioned companies to benefit from those secular trends of digital advertising. As advertisers see solid returns on spend even during these days, and the company continues to innovate on its search and display and YouTube platforms. It's up again today when the market is down. It doesn't seem to be all that impacted by the Department of Justice announcement the other day, where they're all trying to break them up. But, Google has the majority of its revenue comes from the advertising side, but it's got so many non-advertising revenue streams, from Google Cloud to hardware to PayPal and subscriptions. So we just believe that, this has a tremendous runway. You can look past valuations because of all those non-advertising revenue streams. And their margins are very, very decent. We also believe that the margin impact of the growth in those lower, gross margin ventures will be offset by the, the operating leverage as the overall business just continues to grow and drives earnings and growth and revenue over the next several years. So, out of our portfolio, we've got about a 4.5% position in Alphabet, and we have a price target, 12-month price target of $1,760, and it's sitting just under $1,600 now.
Finally, PayPal up 100%. This one worked out.
Yeah, there are quite a few that have really, it's all around the whole digital payments and commerce and services that these companies can do. For the traditional ones of the Visa and MasterCard and American Express, we own Visa, but we've actually took some profit on PayPal, let it come back to us, and then got back in. It's producing 15% revenue growth. It's expanding its profits margins. It gets expensive at times, but there's nothing wrong with taking profit, especially these days. So just make sure that you set your entry point, that you set your price target, you stick to the discipline. And, in these uncertain times, it'll give you an opportunity to take your profit and also get back into the stock. We have a price target here on PayPal of 220. So it's sitting, around 203. We got back in the other day just around 202. So it's still a good place to buy it here.
Okay, we are going to take a break. Kim Bolton of Black Swan Dexteritas is taking your questions on technology stocks. You can email them right now, market call at bnnbloomberg.ca, or call 1-855-326-6266. So our guest today is Kim Bolton of Black Swan Dexteritas, and he's taking your questions on technology stocks. Kim, actually just remind me, are you okay talking about Canadian technology stocks, or should it just be US names?
No. We don't own a lot of Canadian. We follow a lot. So I always like talking about them because we do have them. I've got three analysts, and we do research. So I love doing these programs and having viewers actually ask about Canadian because it prompts us to actually drill down.
Okay, well, on that note, let's go to Jess in Edmonton. Fire ahead, Jess.
Hello, gentlemen. My question is on OpenText. I have followed this stock, and it seems to be doing great, year over year, great revenue, and they either meet or beat their stocks every quarterly result. However, since the last quarter they announced, the stock has been going up from $64. It's come down to 53 something today. What are your thoughts on the stock that is supposedly almost $3 billion in revenue and performing great for years, but somehow has come down so much? So I'll hang up and listen.
Thank you.
Thank you.
Thank you, Jess. Yeah, here it is. It's actually trading at around $40. I'm just pulling up the chart. And, so let me just sort of back up and we'll have a little talk about this. So OpenText, symbol is OTEX. It develops and sells enterprise information management software, which basically just helps digitalize processes and supply chains. So it's very much geared toward enterprise, not so much toward the consumer, directly. And it does it through analytics and AI-powered intelligence solutions. It has a very well-diversified client base, recurring revenues. It's actually had a bit of a correction, and we've been, waiting for this because we have our first entry point down here at around $38. If you go back to the big correction back in March, it got all the way down to about $29. So, Jess, we've got a price target on this of $52.05. That's US. I'd even start to nibble away at it here. The company has a great client following. But we do a lot of work with Gartner Research. And Gartner Research has again named them as a leader in the whole sort of content services platform because they, consistently maintain that double-digit recurring growth rate. They bought Carbonite last year. They bought another company, a smaller company called Xmetis earlier this year that provides a range of secure information transfer. So they're doing all the right things. Jess, if you can buy it with a 30 handle on it, I would definitely get in there because we have a price target of just over $52.
Okay. That's a fascinating story. Now, those numbers, I think, were the US price, and of course, this thing trades on the NASDAQ as well as the TSX. Dave in Toronto, go ahead, please.
Thank you for taking my call. Kim, my question is about Alibaba. It trades pretty cheap relative to the other mega stocks. I think it has like a one peg. It's like 30 PE. It's growing really fast, around 25%, 30% every year. And it has a lot of arms and tentacles to it. So I was hoping that it could go a little bit more cheaper last month, but it's increased 10% in the last 30 days, and I thought it might go cheaper because of China and saber rattling and stuff like that, but it keeps going up. So I wanted to ask you, where would you buy this company if you were to buy it? I'm looking for a long-term appreciation, long-term investor, and I think Alibaba has a strong foothold, and I want to ask you where you would buy it. Thank you.
Alibaba.
Thanks, Dave. You've done your homework. So it's right now trading at 305. We actually have a price target here of 311. So it just sort of got up there on a spike a couple of times earlier this month. So let me just sort of back up. Alibaba, they're the king of e-commerce over in China. They got a market share of over 60%. And their competition comes in the form of JD and Pinduoduo. It's one of the 10 biggest tech companies in the world. It's got a market cap of 700 billion. So as I mentioned, the core business is e-commerce, but they also have cloud computing, digital media and entertainment, and they've got innovation and sort of an incubator, sort of like what Alphabet has, that they call innovation initiatives. So they've also been transforming the business from an online sort of distribution platform to more of a technology enabler for online merchants, almost sort of borrowing from Amazon, Shopify, big commerce, and so on, and Mercado Libre. But Dave, where would I buy it? Oh gosh, it's just that China has come out of this whole coronavirus a lot better than the rest of the world, and so Alibaba's in the right place at the right time. I wouldn't be surprised, Dave, if you actually get an opportunity between now and the end of the year to actually buy it down closer to sort of that, I don't know, sort of 275 to 285 level. I wouldn't buy it right here because it's just so close to, our price target, but a lot of the analysts out on the street. Wonderful company, though.
Okay, let's take a break. Kim Bolton of Black Swan Dexteritas is here to answer your questions on Tech Stocks. 1-855-326-6266. Wendy in Edmonton, go ahead, please.
Hi, hi, Andy and Kim. Andy,
Hi.
You get me hooked eating cookie dough now.
Oh, yeah, eating the cookie. Yeah, make sure you eat the safe-to-eat cookie dough. Yeah.
I know.
Right.
I used to be scared. Thanks to you. Now I'm eating the safe one.
Thank
it's
you.
delicious. Hey, Kim, I need your expertise again. With AMAX price pulling back a little bit, should I wait till the earning report come out in a few days, or the deal of styling? Should I come in to buy some today? Thank you, Kim. Bye-bye.
Thanks.
Thanks very much for the call, Andy. What was the stock there again?
AMD, and
okay.
her reference, of course, was to Pillsbury has come out with cookie dough that is safe to eat raw. Anyway, carry on. AMD, let's talk chips.
Yeah. Okay. So AMD, it's actually come back a little bit from its peak there up in September. When it reached all the way to $94 back in the beginning of September, and has sort of come back to this 78 area. On the way up, I guess it was back in July, we started to add. We bought some more in July and in August, and we have a price target on AMD of $95, which is just below the peak back in September. So AMD, they develop computer processors and related technologies for business and consumer markets. It's pulled back with the rest of the sort of stock, the tech sector. And it has these dips. It's fairly volatile. It's had these where you see these dips in the 30 to 50% range, and they always become ultimate buying opportunities. It's got a lot of catalysts going on, including, the console cycle that is coming up with all the new releases for the gaming side. And so I think it's a bargain if you can buy it down here in sort of the mid-70s, this is in US dollars terms, and it's right now trading at around $79. So it's not so bad here. I'd recommend maybe actually, our average price is, ours is down around 72, but you could buy it here, buy a third here, buy another third down, maybe around 75, and then maybe around 72 or 73. It really shouldn't go below that.
Okay. Another question about chips. Mary in Hamilton, Ontario.
Hello, thank you for taking my call. I'm a first-time caller. And I have a question regarding NVIDIA. What is your thoughts regarding that? And NVIDIA is a good time to buy. Thank you.
Thanks.
Okay. So again, sort of like AMD, it sort of peaked there back at the beginning of September, up around 590, and it's right now trading down just above 530. This is in US terms. And we actually have, we bought in here just above 500. This was back after it sort of fell off the cliff there, went all the way down to about 470 very, very quickly in the middle of September. So it shouldn't go below that 470. We have a price target of 595 again. So I'll just sort of back up. NVIDIA remains, it's one of the greatest secular growth stories in the semiconductor business. It's got a bigger market cap now than Intel. This is, NVIDIA is supposed to be able to close on this ARM deal for about $40 billion that will really, really stretch out their top-of-class design teams. They came out with that GE Force RTX. It was very, very good. Their cloud business has done well for them. And then this acquisition of ARM really puts NVIDIA in a position of strength to lead, really to be the leader in the whole AI revolution for years to come. There is some concern that the Chinese are actually going to stand in front of that. But, we'll have to see how the whole election comes about. So, I'd actually recommend that you buy sort of a 1/3 position here, maybe another 1/3 down around that 500 level, and then another third down around sort of 470.
Okay. We're going to get Kim Bolton's top picks right after this. Kim's first top pick is Mercado Libre. It's an online marketplace company, Kim.
Yeah. Yeah, Andy, there's going to be a little bit of a Latin theme here for the first couple. Mercado Libre, it's a dominant force in both e-commerce and digital payments in Latin America, but, they've only but tapped a portion of their full potential. So, to us, this really makes it a very, very compelling long-term investment. Three reasons why we like it. Number one, MELI, M-E-L-I is a symbol. They're building an ecosystem that really effectively drives user engagement and benefits from a strong network effects. Number two, they are a leader in e-commerce through Brazil, Mexico, Argentina. They own about 86% of the online sales down in Latin America. Number two, they have this other business unit that is involved in the payment stream called the Mercado Pago. It's been growing at 52% annually since 2014. So, it does have a high valuation. So this is why I recommend that you actually do it in a quarter increments. So, I'd buy a quarter here, just under 1,300, and you add a little bit more down around 1,250, and then 1,150, and then 1,050.
Okay. Kim, we're tight for time here. I'm sorry. What is StoneCo is your next idea? What do they do?
Well, this is another Latin American, solely actually over in Brazil, but StoneCo provides financial technology solutions for end-to-end cloud-based technology to conduct e-commerce, electronic commerce for in-store, for online, and also for mobile channels. They're a big company. They got 12 billion. They have a 12 billion market cap. Warren Buffett actually bought into the IPO back in October. So they're really tapping into an underserved market. They have outstanding growth going on. So I'd recommend buy a third here. It's right around 60. Add another third down at 50 and another third at 40.
Okay, and your final idea, Bandwidth Incorporated.
Yeah, Bandwidth. So Bandwidth is a U.S. company. It's a cloud-based communications platform as a service provider that enables enterprises to create and scale and operate voice for text communications. So the symbol is BAND. I'd recommend you buy a little bit here. 172, we have a 230 price target on it. So basically what it's all about, Andy, is that, as you know, in buildings in cities all over the world that are vacant as people are working from home, they have all these dormant lines that are $20 to $30 per line per month. Bandwidth actually offers these phone lines for 35 cents a month. So that's why they're growing at 35% year over year. So it's just a fabulous company.
Kim, we'll have to leave it there. We always learn a lot about tech from you. Have a good one, and thanks again for joining us. Kim Bolton of Black Swan Dexteritas. Thank you. Let's get on to the markets because we have seen a bit of weakness in US equities. A mixed showing. NASDAQ down something like 40 points, as you can see. The S&P narrowly in positive territory. Let's have a look at the TSX. Driven in large measure by oil prices today. I think I referred to this earlier. TSX gaining some ground. The Bloomberg reporting that the market for Canadian heavy oil looks decent going into 2021, partly because of a shortage of that Maya grade associated with Mexico in the Gulf of Mexico region. So that could be very good for Canada. Speaking of oil, let's have a look at the WTI price. As pressure grows on OPEC to hold off from increasing their production by OPEC plus, from increasing their production by about 2 million barrels early next year. There is WTI, so you can see holding above that crucial $40 level. Let's have another look at one of today's big gainers, RCI.B, which is Rogers. And we saw that stock hitting, well, going up more than 9% at one point after the company reported profit that was quite a bit stronger than analysts had expected. And indicating on the call, yeah, it's up almost 11% now, indicating on the call that the strength in wireless customer ads had continued into the current quarter. Gold is on our radar, down around $27 last time I looked, and you can see, yep, down $27 because that US 10-year bond yield has been holding above 0.8%. Amid speculation, of course, that yet more US fiscal stimulus is coming. Monetary stimulus would tend to push down bond yields. You can see, though, yeah, I mean, that's a multi or 10-year bond yield in the States is now near multi-month highs. I think it's, you know, I have to go back to June to see such a high yield. Well, high is pretty relative. Look at that, way less than 1% if you lend money to the US government for 10 years. One last stock, could we have a quick look at CNQ, Canadian Natural, because I know yesterday we were talking about how Credit Suisse, maybe we're out of time, Credit Suisse says it's the only oil major generating the cash to maintain its dividend and bring down debt. Thanks for watching Market Call. We'll be back tomorrow.